Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within yesterday's range, and at this point, heading into the open, on the smaller time frames, the buy side is a bit more dominant. The market has tried to break out above this 58 half to 60 half pre-market resistance, and whether it can hold above this short-term resistance zone is going to help set the tone for the day, and then a break above 66 half to 69 would be a confirmation that the buyers are actually returning and taking control. Holding below initial resistance and below the pre-market resistance zone of 58 half to 60 half would signal a failed breakout attempt, and in that case we would be continuing to trade within the recent range, and from there the market can go down to test for buyers at the overnight VPOC at 1950. It can test the short-term bull-bear zone at 45.75 to 47.75, and then how the market reacts to that short-term bull-bear zone is going to provide the signal for the next move. So if we break below the overnight VPOC of 50 and the 45.75 to 47.75 area, that would mark a smaller time frame balance breakdown, and that can accelerate the price action down into the 38 to 40, the 33 to 34, and potentially 28 half to 31, which continues to be the larger time frame support. So given how the market is setting up right now, in the event that we do get a pullback to the pre-market support or the 33-34 area, those are spots where the buy side can be active, especially the 33 to 34 and 28 half to 31. Right now, what we've seen in the market is that the larger time frame buyers have been active at that larger time frame support down near 29 to 31 from yesterday, and the other equity markets are also testing or have already tested their larger time frame support. So both ESTF and actually even Nasdaq all came down to a pretty strong inflection point yesterday and have attracted buyers, and now the market is in a very balanced state. So today, we are going to have a little bit more of a neutral bias. The larger time frame continues to be bearish, but on the smaller time frame, we are going to have to be more flexible, simply because the market has already tested a strong area of support and has found buyers there, and now we could simply balance here for a bit and establish a base before returning higher. And in the event that we do get a strong breakout today to the upside, we are going to have to be cautious at those resistance zones immediately above yesterday's high, because that would be fading a balanced breakout, which you don't want to do. So if you actually get a strong breakout above initial resistance, and we're seeing broad market strength, participation from the other markets, strong upside momentum, then above initial resistance, we would have to be careful on entering shorts. And if we are going to enter shorts above initial resistance, we have to allow the market to get exhausted. So the 71 quarter to 73 quarter zone is probably not going to be a good spot to short the market. The only time that would be a good spot is if the market were already quite exhausted heading into it, and that area is still valid resistance, but it requires discretion to actually figure out whether it's worthwhile to trade. If the market has balanced, for example, above the 58 half to 60 half for an hour or two, and then it breaks out, then you're definitely going to want to skip that, because from there we could quite easily go up to 77 to 79, and possibly even the naked V pocket 85 and the open gap 86, and that would be a much better spot to fade the market. So not all zones are created equal, and we have to take the context into account. On the downside, the 28 half to 31 is support until broken, and even if we break that support, it's unlikely that it'll be an all-out balance breakdown at this point, and we can still attract responsive buyers. So that's a situation that we'll deal with once we get there, but that is support until broken, and today, so far, the market is in a balanced state. It's in a sideways range, and for that reason, we have to have a more neutral bias. The buyers have been more dominant in the overnight session, but we are still trading within yesterday's range, so we are still in a balance. A trend hasn't actually really established yet. This is still a sideways range, even on the smaller time frames. So that's really the context heading into the open, and we are going to consider trades in both directions. Better to be selective here heading into the weekend, end of week, and be really mindful of trade location. And if you're not getting good location on the trade, then given the level of volatility, you probably only have to wait 20, 30 minutes, and the market will give you much better location and a better setup. So continue to be selective. Don't get sucked into the expanded volatility and start over trading. Volatility in general is a good thing for day trading, and it is producing much better setups and higher reward potential setups, but you still want to be selective and really focus on those 2 to 3 best trades of the day. So those are main ideas heading into the open. Let's see how the market reacts to this 58 half to 60 half. That's really going to help set the tone for the day, and we'll take it from there.